Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into this video we go. Friday, May 2nd, 2014 is the date. Right now, markets are basically on the flat line. We had an early morning surge to the upside, then a sharp fall, and now we're consolidating and chopping sideways as we get into the lunch time frame. All right, first and foremost, S&P up 3/4 of a point, Dow down 13.5 points, NASDAQ up 7. What on earth is going on today? Why are the markets doing what they're doing? The answer can all be found in the jobs number. All right, so we got 288,000 jobs created, which is a pretty strong number. But this is the kicker, okay? And then we'll talk about the unemployment rate at 6.3%. All right, the 288,000 is generally a strong number, but the number a lot of people feel should have been better than that, because the jobs numbers for the last 3 months were impacted by the weather so much. So they were much lower because of weather, January, February, and March. So the idea was, okay, once you get into the April numbers, the job hiring should really flourish back. 250, 350,000 jobs should easily be gotten because now you don't have that weather impacting hiring. So 288 is kind of, it's a good number, but it's not an outstanding number. And considering the Fed on Wednesday said they want to cut QE to zero very quickly. I mean, they're cutting 10 billion. They cut it this last Wednesday. They're going to cut another one at the next meeting. They basically choreographed that they want out of QE. Right? They've said the market is strong enough. They're exiting the stimulus. So this means that the market and the economy is on its own. And what we're seeing with these numbers is that, yeah, it seems to be doing okay. It's puttering along, but it's not strong. It's not strong, especially with valuations on stocks with the market trading near all-time highs. So that's the issue there. I think that's the big issue. All right, so that's what we have going on there. The unemployment report, we saw a 6.3% unemployment number. That was down from 6.4%, which is a very large drop. But the issue there is that it seems like a lot of people are just exiting the job market. And that's worrisome, because there were a lot of people that have been looking for jobs that decided to stop looking. And when you stop looking for a job, even if you're unemployed, you are not considered in the unemployment number. So you're not considered unemployed technically if you're not looking for work actively. So that's an issue there. So the question is, are a lot of these people that are now not working anymore and not looking for jobs, are they never coming back to the jobs market? Because in that case, well, then 6.3% really is no different than 6.7, just because a bunch of people decided to stop looking for jobs. You can't include it and say, oh, well, a lot more people got jobs, because that's not true. So that's a big issue there. In any case, early in the morning, we saw the markets fluctuating a lot. Initially, we opened flat, and the market surged up. We went into resistance here, and then this is where things got interesting. The dollar-yen collapsed. Take a look at the dollar-yen chart, guys. And by the way, for those of you that may not be pros, the markets follow the dollar-yen very accurately. Look at this collapse on the dollar-yen. Unbelievably fast collapse. And the markets always go with the dollar-yen. So if you look at the markets today, we fell, and then we've kind of bounced around, starting to float up a little bit as the dollar-yen is getting a little bit of traction here. So notice that, and that's a big drop. I mean, that's about as close to a collapse as you can see in a long, long period. In such a short time, too. In 30 minutes, 1, 2, 3, and you basically went from 102.80 all the way down to 102.15 or so. And in currency terms, that's a huge drop. So that really spooked the markets to the point where we came all the way back in, giving up the gains on the SPY. Right now, the SPY is up 7 cents. I wouldn't be surprised if we have a flattish day today, but I think that you have to keep your eyes on the dollar-yen, what's going on in China, and then next week, I think the Russian-Ukrainian situation. I mean, today I just heard that two Ukrainian helicopters were shot down as they're trying to retake one of these cities that has been overrun by Russian separatists. So, I mean, if that starts to boil over, who knows if the fighting gets a little bit more intense? Will the Russians step in? I mean, who knows? But the markets definitely are going to be wary of that next week. Now that the Fed's over, the jobs numbers are over, earnings for the most part are over. You have to think that the markets turn their attention back to China, to the U.S., and obviously to Russian situation. All right, so that's what we have going on here, guys. Again, markets are basically flat on the day, as you can see. Take a look at the dollar today. Look at this dollar move. So the dollar had a big gap up on the jobs number, and look at this collapse. And this is the dollar. I mean, essentially, when you're looking at the dollar yen, you're looking at the dollar in terms of yen. So what's the dollar doing against the yen? And the dollar is, as you can see, collapsing here, which is again the yen. If you look at the FXY ETF, you'll see it's going vertical. So this is the dollar yen. So they're inverse, and that's when you put them together. That's how you get the dollar yen. But the point is here again, big pop there. Big pop on the yen, big drop on the dollar, although the dollar has just come back to the flat line from where it was. So, I mean, this is really interesting. If we go to the daily chart of the UUP, look at how the dollar opened into the 20 MA and then just collapsed back down. And if the dollar breaks down, it used to be back in the olden days, and when I say olden days, like 3-4 years ago, 5 years ago, it used to be that the markets would go with the dollar. So if actually the inverse to the dollar. So if the dollar was falling, the markets would rally. It's now different. It's now the opposite. So now if the dollar falls, it means the yen's going up, and then it usually goes. The markets will fall with the dollar. And that's why you see this drop here, right? We've had a gap up and a collapse on the dollar, and the markets have obviously gapped up, and same thing. They've come right back into the flat line if we flip over to the intraday 10-minute chart. So that's kind of interesting. We also saw gold rallying sharply today off of that as well. You can see gold open lower on the jobs number, and then once that dollar yen started to collapse, once the market started to get fidgety, the gold chart just ripped higher. And the GLD is now up $1.50 and change. I mean, that's a nice move, especially from the gap down today on the gold chart. Silver, if we take a look at silver, also a strong move. In fact, that's a very strong move, up 2.3%, coming in a little off the highs, but that's a big move on silver. Why is silver stronger than gold? Why is the copper chart? I mean, look at copper today. Copper's having a solid day, up about 1%. So why are the metals, the industrial metals, doing well today? Because the jobs number was decent. It does show you that there's growth there, and I think initially you saw a reaction from those industrial metals like silver and copper, that, all right, listen, maybe demand for these metals is going to rise because things have been going so well. So these type of things are influencing the market overall, and you have to kind of, when you're a trader, when you're an investor, when you're a swing trader, you got to have a full range here. You got to be able to understand all the nuances. You got to understand currencies, commodities, and equities overall. All right, there are even some other nuances that you got to understand as well. But in any case, LinkedIn had earnings yesterday after the bell. Let's take a look at that. That stock is down about 5%, essentially giving up all the gains from yesterday that it had going into earnings, as the markets, especially the NASDAQ, had a decent little day yesterday, and today right back down. Facebook today, take a look at this. Facebook's a little weaker. Twitter, look at Twitter. Twitter has an interesting trend line here. I want to show you this trend line, guys. So if you take these lows here and you just draw a line right up underneath, look at this. There we go. So you have all these, and look where you're hovering on. So you broke through it, and now you're hovering here. It'd be interesting to see if you can get back above and solidify and move above, or if you solidify and move down on this chart. But really interesting things going on there with the Twitter chart. Twitter obviously had those bad earnings a couple days ago, and has since then fallen back down quite a bit. You can see it's rallied off the lows, but if you break and you really solidify and move down here, you could go back to double bottom very quickly. Very quickly. Yesterday, we had a good trade. I picked up my DANG a couple days ago, 2 days ago. Yesterday, I sold it for a 10% gain. We bought the DANG right down here, and we sold it yesterday morning. I didn't do a video yesterday, so that's why I wasn't able to update you guys, but a 10% gainer there in the Research Center. If you're a Research Center member, you got an easy 10% gain right there. So good stuff, and, bottom line is it's just gravy or extra dollars in the pocket for everyone who's a Research Center member. So I encourage you to come join the Research Center, guys. I am picking up some new stocks today that we'll post. Right now, market's just going back to the spiders. This is actually a bearish pattern. I just wonder if the Friday afternoon volume is going to be so light that it's hard for it to go to the downside. But basically, if you see a pattern like this, generally it does dictate downside. So the only thing that could change that is light volume. But again, you might even see some profit taking into the close if the Russian situation kind of looks more and more grim as we get towards that 4 p.m. Eastern time frame. All right, on that note, folks, I'm going to bid you farewell, but come take the 7-day free trial to the Research Center. That's what it's there for. You want to check us out. You want to get a couple good trades in a 7-day period. Rock and roll. Come join us. This is what we've been doing all year. Now we're at 185, over 185 net percent gain after the DANG trade, and that's an awesome amount of profits, guys. Any way you cut it, in basically now 4 months' time, 185% profit. Can't beat it. Again, as I always say, even if you just put 10% of your portfolio in each position, you'd be up well over 18% now, almost 19% on the year. That's on the year, folks, in 4 months. I mean, we're on pace even doing at the 10% rate to do over 60% return. That's sick. All right. Take care. Come join us here at InTheMoneyStocks.com. Profit with the pros.